Good day, everybody. Turnaround Tuesday. We'll see if we get any Tuesday reversals. I'm Dale Pinkert, your anchor in FX Streets Live Analysis Room. How are my LAR lines doing today? We have another negative day in the equity market. Crude lower by a shade. S&P's getting ready to push the lows. Crude's trying to dig in its heels here. CAD still holding. Still think we're going to at least a 51% retrace level. I'd still buy breaks there. Pound really dogged it. Maybe we have to take out these lows first before we get a better rally in the pound. Still think it could fight its way back to 146. And although the euro looks like it's coming off here, this one I was wrong about. The euro Aussie really accelerated. This, I thought it was going to be a fib retracement. Turned out to be an explosion. Just blew through this three dry formation here. Everyone doing okay? We have a couple of interviews today, again, a double header. We have Norm Winsky in a few minutes and then Adam Button. Adam will give us a seasonal view for the month of February. And Norm will be with us in a couple of minutes to talk about some planetary stuff. He predicted that the Broncos would win the Super Bowl. So thought we'd go to 1360. Still think we could get there, 1360 in the euro. Yen still under pressure. So that's it. Well, who's in the house today? Who's hanging out with Dale Pinkert today? Hi, Cyric, Alien, Khalid, Jax, BW, Sinatra, Beckton. Abel, are you here? Mr. 1776. Yeah, I'm sure he's going to show it. Yeah. So I'll just tell him anytime you're ready. ISW, what's going on? What are you doing, Khalid? I'm still trying to bottom pick the oil market. Should probably wait till Canada gets up towards that 42 range. Doesn't look done yet. Okay. Norm's telling me that link you gave me isn't working, Adinda. Got an error message on it. Should I just give him the link you gave me this morning? That's what I'll do. Doing okay? Any looks before? Hello, Abel. 28.20. Okay. So another buck, $2 lower, huh? Okay. Are you here, Yohei? Forex Crunch. James here. Melon, welcome to Lard. Jake. Hi, Pipper. Becton. Hi, Jake. Nice to meet you. Yeah, take it away. Yeah, interesting. Okay. Thank you, sir. I believe Norm is here now. Good morning, Norm.
Good morning, Dale.
How are you, my friend?
Good, yourself?
Doing okay, everybody. Norm Winsky from www.astro-trend.com. Norm's usually here once a month to share his planetary work with us, and congratulations on picking Denver, which confirms the January barometer. I was pulling for them for a different reason. I wanted the old man to leave in style, Peyton Manning, and he didn't do much in that game, but he still got another ring. So what are the implications? Dow 5,000 next week, Norm?
I don't think it's quite that dire. Do you?
Maybe that might take a whole month or so, huh?
It wasn't a total blowout, you know.
Yeah. So I'm looking at your interview notes. It looks like part of them are being cut off on
Uh-oh.
the right-hand side.
On the right side. I don't know what to do with about that.
Okay.
I tried to move it
There.
over. How about now?
Still on the right side.
Hmm.
You have a margin on the left side, but not on the right side for some reason.
How about, is that better?
Almost. Maybe go a little smaller. It's still cutting some off, but good enough. Good enough for government. There you go.
Okay,
Beautiful.
now I'm in trouble reading it, but that's okay.
All right,
I
well,
know.
put your magnifiers on.
Maybe I can move it over somehow.
Okay, Mr. Magoo. Do you remember Mr. Magoo?
Oh, sure. Jim
Yeah,
Backus. Jim
yeah, you
Backus.
got it.
Also on was it he? Oh, he was Mr. Hal on Gilligan's Island too.
Oh yeah, what a career!
Can you see the
sounds
shortcut?
like sounds like our career in the
Is
market.
it cut off now, or can you see?
Yeah, it's cut off on the right hand side, but go ahead. It's fine. It's important that you read it so you see it. We have all the key dates are there, so we're just missing a little copy on the right hand side.
All right, so folks can contact me, and I can. Oh, if they want, where we're gonna at the end here, we're gonna tell them how they can get a copy of my letter. Most of this is copied right on my letter.
Right.
Okay. Alrighty, so here's my notes, and might want to just tell the folks that I was originally scheduled to be on Friday because I had that targeted as a important window, and something came up and it didn't happen. So now I'm here today. One of the dates I did have in mind though was today, February the 9th, for several markets.
Hold
Because
on a second, Norm. I have to ask the community if we should send you to the Lard Detention Center. Hold on a second.
right.
So Norm didn't show up Friday. He's not telling the real reason why he didn't. Um, should we give Norm a pass or throw him into detention? All right, you got a pass, Norm. Go ahead.
Well, thank you very much. Thank you very much.
Norm, we're all human, buddy.
There you go.
Even I take a day off once in a while.
All
So go
right.
ahead, bro.
Yes, sir. So here we go. I'm going to talk about the stock. I'm going to recap. I was on about a month ago in early January, and I was looking for a big down in the early part of January. It went a little farther than I thought, so I had a clunker in the middle of the month where it kept going down when I thought it was going to kind of go flat. So then the train got back on the track. So here's the bottom
Yeah,
line.
I got out there at 1930. I was short from near the high. I left a lot of chips on the table.
Okay. Anyway, the
I
bottom
don't, I
line.
don't like, I don't like when that happens. How about you?
Oh, I just love losing money. There you go.
Well, it's not losing money; it's opportunity cost, isn't
There
it?
you go.
Yeah.
Yep. Don't worry about don't look back, right?
Yeah. Next.
Next, so the bottom line is that I had two sets of key dates. Had you contacted me and gotten the letter for free, you would have had these dates: January 4th, 5th. These dates, and I also had a planetary index model where I had it plotted out in advance. And so the bottom line was, let's see here, we got it down here so I can find the numbers. Astro key dates, here we go. I hit 5 out of 7 on my Astro dates, so it shows on this S&P chart here. Can you see the S&P chart there,
Yeah.
Dale?
Yeah, and the guy in the
Your
stock
buddy
hit.
there, he got in the stocks not too long ago,
Who is that guy?
some guy who got in the stocks. You get
Oh,
it, Dale? See, he's in
yeah.
stocks. Yeah.
You know, Norm, it reminds me of the guy who went to the doctor and he had some blood work done, and the doctor comes in. This guy's 92 years old and said, you tested positive for HIV, and he was in shock. He goes, 92 years old with HIV, and he leaves the doctor's office and he sees his friend. His friend could tell he's very anxious and upset. And he goes, buddy, what's wrong? He goes, I have HIV at 92. And his friend goes, oh, that's nothing. I have IBM from 190.
Oh, I get it. Okay.
All right, go
Okay.
ahead.
And I had some Fibonacci dates here, and the Fibonacci dates hit 4 out of 5. That's 100%. Got lucky. You may remember, when I was here last time on your show last time, I talked about in the first week of January, I was looking for a big change in trend for grains, especially soybeans. And you may remember January was a big meltdown month for many commodities, but not for soybeans. The grains bucked the trend, and there's your soybeans. You see the soybean chart at the bottom there?
Yeah. Is that where it's at now, or is it over the red line now?
I'd have to go look. I think when I last
Okay.
looked, I think it's about up here, somewhere around there, right around
Wow. So
883.
it broke out. Oh, yeah. Nice.
Yeah,
Good
it's a
call.
small breakout, but you still had an uptrend. You could have made some money.
Yeah.
All right, now here's the exciting stuff coming up here. Now I'm going to talk about some of my annual forecast models. Every year I have my February forecast for Fun Fest, where I could pull out some fun forecasting models. I've been reviewing for many years, reviewing the Chinese astrological calendar. And last year we had the year of the wood goat. This is not my work. I go look it up on the internet. I'm not fluent in Chinese astrology. And
This
so
year's a monkey, right? Monkey.
we got the fire monkey. Those monkeys are really tasty over a fire.
Oh, wow. So there's always an adjective associated with it. I never
Right.
knew
It's a
that.
fire monkey.
Okay.
Fire monkey is fire. I think it's supposed to be positive. Last year we had the wood goat, but it was in a fire year. Don't ask me. I have no idea how all this works. I just pull it off the internet.
Right.
And so they told us last year that it would be a steady, a steady upward year. And I think we know that was not the case. Here's your black bars here, for example, for the Dow Jones, and it was pretty wild and whippy. And China basically almost melted down the toilet, before the year was out, right? So the point is that the Chinese astrology lately is been pretty much upside down, for the last several years. And so we'll be looking at the forecast here in a minute for 2016 and see what they're saying now. Now, we also have the January barometer. For those of your folks who don't know, there's something called the January barometer. We're talking about the stock market now. That there's an old Wall Street adage: as January goes, so goes the year. I think this works pretty well for currencies too. If you get my free letter, we'll go through what I call fractals. This is a fractal statement where you take a small piece of something and you just extrapolate out the bigger picture. And so I think this works well for some commodities too. I think my Japanese yen, I've been doing that fractal on that for several years, and I think about 3 years in a row, it's kind of nailed it. So you might want to contact me for that. Anyway, the January barometer for the stock market is how I got started doing this back in the early 80s. And so as January goes, so goes the year. And so if January closes on the original version, if January closes up, should expect an up year, and if January closes down, you should expect a down year. This has worked about 75% of the time since 1950. That's what the statistical analysis is. I didn't do it. I found people who were doing statistical analysis on this, and that's what they got. I've taken it a step further to use it to actually forecast turns during the year with some great accuracy. We also have the Super Bowl indicator. If you're not familiar with that, that's the NFL is divided into two conferences: the NFC team and AFC. If the NFC team wins, that indicates a bullish year, that the market will close higher. And if the AFC team wins, that indicates a bearish year, and the market will close lower. Amazingly, this indicator has an 82% batting average. That's pretty. I don't know too many indicators for any market that are that good.
Yes.
I've now taken it a step further, like the January barometer thing, and fractalized it to where I'm using it to forecast turns during the year. Here's 2015 now. If I scroll the chart down, can you see the whole entire chart there, Dale?
Yes.
Good. So you can see the colored line is what the scoring pattern was for last year's Super Bowl with the Patriots and the Seahawks. And you can see that when we made a high in May, that indicated we'd make a low about September, and then we go back up. If you remember back here in the August-September period, people were calling for the end of the world, literally. Major meltdowns and catastrophes. And Dale, you remember the Shemitah thing and all that stuff,
Yeah.
right? There were some theories out there that we were headed for a catastrophe. I said my models say that we're going back up till December. And that's part of that was based on this model, you see. So now let's look into the future. Here's the future. So here's your 2016 Super Bowl forecast.
I love the future.
We're going to spend the rest of our lives there.
Good one.
Better like the future, right? So here you go. So you got your January barometer. If you paid all attention to the stock market, it had a sharply lower January, and that it forecast. And now I'm getting to the point where I'm sort of interlacing these two models. That the January barometer can forecast the Super Bowl, not only the stock market, but also who's going to win the Super Bowl. And the Super Bowl and both the January barometer are forecasters for the coming year. So the fact that we had a sharp down January indicated that the Denver Broncos and the AFC team should win, and that's what happened.
Yeah, did you bet it? Did you bet the game?
Well, where would I go to bet it? I don't live in Vegas, right?
Oh, online. Maybe with a neighbor. With a neighbor.
Congress got rid of most of that, didn't they?
Oh, I don't know. Yeah. I'm sure you could have found a bookie.
But this is kind of the early stages of does the January barometer. How often can the January barometer forecast the Super Bowl? So I'm getting excited here now. This thing seems to be working pretty well. So
Well, did you back test it and see if
Well,
go
they've
back to?
individually they've been doing a great job of forecasting the stock market, but I don't think
Yeah,
anybody ever applied one to the other. You see what I mean?
yeah, that is a new twist. Yeah.
Yeah, it's like Chubby
Okay.
Checker, right?
Yeah.
The twist, right? Okay.
So here we
Anyway, so
go.
that's the exciting thing I'm working on now. Kind of an neat experiment. So we're able to forecast, and also the scoring pattern of the Super Bowl, of this year's Super Bowl, should be indicative of what the stock market will do for the year. So I think we had the initially until the end of the right, but near the end of the game, you had Denver kind of peaked its momentum. What during the game, if you apply that to the year, would be somewhere in August, and then the Carolina mounted a bit of a rally there, yeah, and so but then at the in what would be toward the end of the game, Denver scored, so that we went back, back in Denver's favor, so that kind of gives you a general idea of what the course
Okay,
of the
so
market
yeah,
is.
Denver was in the lead. They jumped out to an early lead. They held
Right.
it, wrapped it up at the end of the year. So bearish forces will be prevailing, according to this, into the August time frame. Then we get maybe the a rally into the election, and then it's back down again.
Yes, sir. That's it. So I have
Okay,
these charts
interesting.
in my, I have these charts available. I do want to save some time and energy, and also give people an incentive to contact me because I like to meet people. I'm a people person, and so you can contact me, and we can look at some charts. Coming up here on the planets, we have today, this afternoon, and tonight, especially tonight, is probably the biggest single planetary event of the month. Saturn and Pluto are going to line up. I think that happened on Pearl Harbor Day in December of 2015. If you remember, Dale, that was a big turning point for about 5 or 6 different markets. And also in late August, we had this. I think the August 24th, we had a big meltdown in the stock market in August of 2015, and the low coincided with this a relative of the Saturn Pluto lineup.
So we could be close to at least a
We could
bear
get a
market
well,
rally in
probably
equities.
yeah,
Bear market rally.
we could get a short term low here. I got a problem though, and I got more negative stuff coming after this, so I think we might
Okay.
get a short term
How
low
about
here.
bonds, Norm? Bonds have been on a big run. I know you have a
Well,
bond
there
fractal.
this is also a bond aspect. The planets are indicating a turn in the bond, so you might get a short-term turn in the stocks and the bonds. And also, we have indicated here coffee, big time for coffee because it's a double whammy for coffee. Oh, I missed cocoa, coffee, hogs, oats, stocks, and T-bonds are all indicated for this window. So I think you might get at least a short-term turn for these markets, and then for the stock market and perhaps the bonds, you might then get a continuation.
Okay.
Hold on, somebody's. I don't know why somebody would be calling me now, but
It's Donald Trump.
I guess I took care of it.
Okay.
Somebody just got hung up on. All right, so that's the big one. That's why I'm on today, because we got the big Saturn Pluto thing happening. Now they're doing it again. Now I can't believe it. Sorry about that.
That's okay.
Alrighty, moving ahead now. Here's the stocks. Here's your 30-minute S&P 500. By the way, how about these whipsaws in the stock market? I don't know if you're watching that or not,
Yeah.
but just overnight we were down big until about 1 or 2 in the morning, about down about 20 handles or so, and then we rallied all the way back up to even, and now we're back down about 20 plus handles.
Yeah. Volatile.
It's crazy. So here's your future dates. Here's what the forecast is. Got it down into down, down, down. I have my planetary index chart in the letter. You can get that. You get the letter for free if you contact me. We had a big window coming due for the fourth of the fifth, based on my Fibonacci models. And here's the S&P chart here. I put a nice red arrow there right for the morning of the 4th where we had this little top here. Does my arrow working? There we go. There's my
Yeah,
cursor right
those are
there.
nice.
Can you see
That's
my
pretty nice.
cursor?
Yes.
Right about there. And
Uh-huh.
so you can see how we've been going down. So I'm looking for a possible short-term low here by tomorrow. And then we got some key dates here. We got let's see, the 8th, the 10th. That's tomorrow. And then we have a big cluster for the president Monday after the president's the President Day. And then here's my Fibonacci dates. We have the next big date for the Fibonacci is President's Day weekend. So a big cluster there, President's Day weekend to the first day or so after. And then we also have Fibonacci tipping its hat for my birthday there on the 17th. That's why we're getting the day off, because of my birthday, All righty, Dale. Now here I always throw in some currency stuff for your folks. Here we go. We have how did that work out last month? Well, we had 3 dates. No, I'm sorry. We had these dates: 4th, 11th, 15th, 19th, and 27th, 29th after the close. Obviously, when I wrote this letter last, what was it, the weekend of the what was that, the 27th weekend, 27th, the 28th, 29th weekend. Sorry about the 29th weekend. There wasn't enough information to tell whether it was working or not on these very end dates, but I was able to evaluate the other dates, and so we hit 4 out of 5. So I evaluated the first 5 of these and hit 4 out of 5, 80%. That's pretty good. Going to have to work on that miss, huh?
Did
And
you
then we
catch
have
the
the
sell before it? Did you catch the sell before it broke down out of that little minor uptrend it was in? That would have been
this is back. This is from
last week's.
this chart's from the letter. This is the results chart.
Okay.
Which was in the letter at the end of January. From the end of
Okay.
January.
Okay.
Here's the updated chart here. I'll just show you here. I marked these dates on the chart here so you can see whether you would have had a chance to make some money or not. These green arrows are winners. So that's at the low of the channel there. There's at the low of the channel there. This is near a little like 1 day high there at a spike pullback low next day. And here's a
Yeah.
low there, you see. Here's
Yeah.
the updated chart. I did put in this last night. So we had here's this was a date we had back on the 1st of February was one of these dates. You see that?
Okay. So you did have a date for the big decline.
First, we had a topping, a pattern there for a wedge triangle pattern
Yeah.
right there, and we broke to the downside there. Here's a
Yeah.
nice turn we had here yesterday, Monday, where we
Yeah.
had a turn due there, and for the 8th, and it kind of topped out there, and I think we're lower this morning, aren't we?
Yeah.
When I looked a little while ago, I think we were down about 40 cents or so, 40, 45
Yeah.
cents, right?
Yep.
Moving on down here now. Now it's time to tell folks how to get all the free stuff.
Okay.
And so you can get my letter for free and a free class that goes with that. It's a 3-hour class. You'll get a virtual a trader's college education. I'm going to cover Astro, Advanced Fibonacci, GAN, fractals. I will probably touch on some theoretical physics, some music theory, all kinds of things. GAN, some kind of thing that GAN might have designed, And we touch on all that. You get all that in about 3 hours in my letter for free and how to read my letter. And all you got to do is contact Norm I'm here in sunny but chilly Florida today at 239-594-3939. That's 239-594-3939. Or all of those international jet setters can contact me on Skype at norm.winski. That's norm.winski. And I think, here's my email. If you'd like to contact me, my email might be better. I'm going to be out this later today, so if you try to get me, and probably might be best by email. Then my email is nwinski, that's NWINSKI, at embark is EM, like Edward Mary, BARQ, like root beer, and then mail.com. That's nwinsky at mparkmail.com. So, any questions, Dale? Or I take questions from your folks if
Let me see.
they want to
Any
do that.
questions for any questions for Norm from the community before we thank Norm for being with us today? Let's give it a second or two. There's a little bit of a delay. Any questions? Ricardo, Sinatra, Alien, Luimo, Jake, any planetary questions for Norm or what he's described?
You got Sinatra in the group there?
Yeah, I
I love
believe he's
Sinatra.
from Germany.
I love Sinatra.
What's the weather like on Mars, Norm?
I
High.
haven't checked lately. Sorry about that.
Okay.
I can tell you.
SW, I would say that pay attention to some of these dates, and I really have seen many of these turning points manifest. Any other questions? How is gold developing? Gold has been the star norm for the last month or so. Best rally we've seen in gold in a long time. Kind of moving counter trend to the stock market. Any view?
I just do what the planets tell me, and the planets did not have any strong indications for gold this month, so I didn't. It's on. I cover about 30 markets on my calendar, but I did not write about it or go into depth on the gold this month.
How does the full? Do you take the moon into account on your planetary work? Full moons?
Only if you're short-term trading.
Only for short-term trading, Ron. Okay. Thank you
But
very
I
much,
understand.
Norm.
I had a friend who did a statistical study on the lunar cycle. He was a skeptic, and he applied that to currencies, and he said that some of the currencies, I think especially the yen, was very responsive to the lunar cycle.
Okay, I'm not sure what your question is, Rick. Okay, he's looking for a turning point in the market in the next couple days. Oh, okay. And you think that a short-term low is coming in the next couple days in the stock market?
No, I think
That's
it's
what I
going to
heard.
be. If it doesn't work by tomorrow, it's not going to work.
Okay, so Norm gives his dates a 24-hour tolerance.
Right, exactly. My parameter is for me to be right. When I was showing you the score on my forecast, if it's not right within one trading day, it's wrong.
Okay, great clarity.
Yeah, because
Norm,
otherwise,
yeah,
how can you manage these trades? You know.
that's true. But you know, almost everything. I don't care what you use. One of my expressions is, if you can't be wrong for a day, how can you be right for a week?
Okay.
So, thanks so much for bringing your stuff to the table. Very interesting. I like the analog of using how the game progressed to kind of look ahead to what might be periods of weakness and periods of strength in the stock market. Never heard that before. Very original thinking, Norm, and thanks for sharing it here with us on FX Street in LAR.
Thank you very much, Dale. Great being on the show, and good trading, everybody out there, and have a great day.
Okay,
I'm
thank you, Norm. Good,
looking forward
good
to helping.
hunting. I'll see you next month, God willing, right?
Righto, looking forward to helping some of your folks.
So I encourage people to get a hold of Norm at nwinsky@barkmail.com, or you could Skype him at norm.winsky. Again, the website is www.astro-trend.com. Telephone number 239-594-3939. Norm Winsky. Thank you,
Thank you very
Norm.
much, Dale. Have a great day.
Okay,
Appreciate it.
bro. You're
Bye.
welcome. Oh, I'm back. Can you guys see me? Okay. All right, so I'm going to take a quick 5-minute break and we'll get our heads into the markets here. Hope everyone enjoyed Norm. We're going to have Adam Button with us in about a half an hour. Adam should be joining us. Stick around. I'll be back in 5. Break, please, Adinda. Okay, I'm back. Everyone doing all right? Hello, Simone. Welcome to LAR. Everyone welcome Simone to, I'm thinking 1360, Simone. Everyone welcome Simone to our community. Feel free to share your work with screenshots. Everyone doing all right? How'd you hear about us, Simone? Melon, welcome back. Mystic, long time, Mystic. How are you? FX Goldie's in the house. Mike, Luimo, FX John, how are you? Ricardo, Becton, Pip Sniffer, that's a new one. Becton, welcome, Becton. Welcome, Sniffer. Welcome, Pip Sniffer, to our community. That's a new handle. You're a man? Okay. I'm a man, yes I am, and I can't feel and love you so. Hello, Abel, Fame, how are you? JM, Jax, MRC, hi, Timbo, Izzy, SW, Jake, Numbers, welcome back. Doug, how are you? So we have some time to share some technical looks. Come on, Lar Lions, show me what you got. Show me what you got, guys. I don't know what's going to do it. Euro yen recovering after a 2 drive. Euro pound almost at objectives. Head and shoulders objectives that Ricardo showed on Twitter. We're almost there on the measured move from the head and shoulders bottom. Meditation link. I like it, Rick. Thank you, Rick. So that's funny, man. That's funny, Rick. Jackson's long euro yen. That's pretty good, buddy. It surprised me. I'm going to send that around. Back up to 30 at least. Thank you, Jax. I'm going to thank Jax for his euro yen look. Here's an Aussie look from Cyric. Right down here. Like a 3 driver, too. Thank you, Cyric. Everyone thank Jax and Cyric. Jax for his euro yen. Cyric for the Aussie. Thank you, guys. Okay, here comes Ricardo Picasso. Thank you, FX John. There's a nice testimonial. Who agrees with FX John? Who agrees with FX John? Yeah, I was wrong about Euro Aussie. Now it's up there. Yeah, I thought this was going to be a fib retracement. You were right, Rick. I thought we'd stop at 758. I thought we'd stop at 58. Thank you, Rick. I want to thank Rick for his Euro Aussie. I thank you, FX John, for that testimonial. Thank you, buddy. Glad to have you be part of it. Good one. Oh, thank you, Jake. Giuseppe's excellent. Euro Kiwi, same type of formation here. Nice, Rick. So we're either going to break out or set up a descending triangle here. Thank you, Rick. You got another one? Okay. Thank you, Rick. Everyone doing okay? Stick around for Adam Button. Who likes Adam's work? Give me a Y. Yeah, that's the one I was talking about. I love Adam's work. 79, 50, 80 it measures. Yeah. You know, it's amazing. I could have just ridden that for a huge trade all the way up. Called it down here, then got back on a pullback here, got out, and I'm missing this part. And all the time I was talking 79 or 80. 78 to 80 anyway. Rick's measured move takes it, looks like 81. Thank you, Rick. So I just didn't have the patience to ride it all the way to objectives. It's my shortcoming. But sure saw it at the 70 level. I was there for a piece of it. Thank you, Rick, for reminding me how many pips I left on the table. Thank you, buddy. Ricardo Picasso. Everyone Everyone doing okay? Stick around for Adam button. Add FX button. I have a nomination for Ricardo to receive the Man Award. Okay. Anyone second that nomination for Rick to win the Man Award today? Any other nominations? Donald Trump? Anyone nominate Donald Trump for the Man Award? Okay. How about Jeb Bush or Hillary Clinton or Bernie Sanders? Okay, Ricardo, you win the Man Award. You win the Man Award over every presidential candidate in the U.S. Congratulations, Ricardo. Yes, you guys love Don. You're going to let him come into the country. Let's hear your acceptance speech, Ricardo. You're a lion, Ricardo. So I think he was talking that it's due today, and if it doesn't happen by tomorrow. I think that's what he said. Today was a date, and he gives a 24-hour window. Thank you, Rick. Rick's taking a shot for a counter trend trade in Euro Pound here. Getting a little divergence. It was confirmed. He's looking for 7.25. Okay. So, everyone doing okay? Pound looks like it's going to come out of here. This looks like A, B, C for A, and this may be B. And now maybe we head up towards this 146 level. Spoos are ripping, huh? Everyone doing okay? Timbo, how are you? Doug, how's it going? BW, how are you? Mystic, it's been a long time. Hope things are going okay with you. Pip Sniffer, feel free to share your work with us. JM, Ron, any views? MRC, hi JJ. Timbo, numbers, how are you? Goldie's in the house. Becton and Ma. Everyone welcome Ma to our community. Welcome, Ma. Everyone doing all right? So to me, it looks like the pound's we're gonna get a fib retrace in the pound here. Possibility, something like this. At least 61.8. Gonna take it to 45.50. And I think there's a chance for 88.6 or 76.4 back to 146. That's my view in the pound. That euro makes new highs towards 113.60, and we get a rally in the pound up to 146. That's the way it looks to me. Congratulations. Everyone congratulate Jax for a ZJ trade. Nice shot, Jax. See, Alien. I'm not sure what you're trying to show. Not sure what you're trying to show, Jay. Here's Jack's Euro Yen trade. Here's a pullback in Canada. Here's Jack's Euro Pound trade. Goes right in here, right to the 50-day moving. Yeah, but when I clicked that link, I didn't see a guppy chart. I didn't see a guppy chart. Everyone doing okay? Hope you guys are. Stick around for Adam. Everyone doing okay? Nice shot, Jax. You're the man tomorrow. Okay. Thank you, Jay. That's all right. Yeah, that's a nice look. So he's pointing to this divergence down here. Looks like a 3 driver. One, two, three. Thank you, Jay. Thank you, Jay. Stick around for Adam. Good warning, Sinatra. Could still have another buck to the downside in it here. Yeah, it's trying. Thank you, Jay. Aussie yen. Aussie yen turned first. Thank you, Jay. Okay. Thank you, Ricardo. I want to thank Rick for this look at 113. Thank you, Rick. Adam should be with us in a little bit. Stand by for Adam Button. So all the crosses are doing okay. Platform slow today. Adam should be with us shortly. There's a reversal in the end. Stick around for Adam. Put your pom-poms away, Jay. It's just another trade. Just another trade, right, buddy? Nice shot. So we had a lot of people cleaning up on the crosses. Jack's cleaned up. Jay cleaned up. Ricardo cleaned up. Beautiful three driver here on the guppy. Stick around for Adam. He should be here shortly. Okay, thank you for the update. Oil is going. Thank you for your fine reporting. Thank you for your fine job of reporting. Waiting for Adam Button. Everyone doing okay? If you love LAR and the people in it, give me a Y. If you love this community and the traders and giving people here, sharing their work. Give me a why. There's mine. I consider it a blessing to facilitate this community. I've done it before in many other venues, and this is the best I've seen. The law of attraction in action. Attracting great traders with a giving spirit to share their ideas on a daily basis, helping those that are lost find their way, helping pros even fine-tune their work. Iron sharpens iron. Get a lot of good testimonials from time to time, how people have been in other environments, and this is the best they've found. And they're including environments where they actually pay a monthly subscription fee. So how about a hats off to FX Street for giving this venue a shot 2.5 years ago, and look at what it's evolved into. A great 24-hour Forex market content video channel on YouTube. Can you guys say mushroom? Would you say Lar has mushroom? Cheers. Yeah. There's Rick Scuppy look. Don't fade Ricardo at your own peril. He's got a hammer here. There's Adam. You got your coffee?
Yeah, that's what after there.
Okay, everyone, we have the distinct pleasure of speaking to my buddy from Canada, Adam Button. Adam at FX_Button at Forex Live. I'd like to open it up, my friend, with how's your better half? How's married life? And I'm not talking about Greg Michalowski.
Oh, Greg's gonna love that. Yeah. I'm married. I'm happy. Yeah, I got the ring and baby on the way. So busy times here. Cold days up in Canada. Hot for the Canadian dollar though today. Yeah, life's good. Life's good. How's things in sunny San Diego?
Warm, actually, in the 80s. So, you know, we haven't gotten as much rain as I thought we'd get from El Nino. But, you know, it's still February. It could still happen. Interesting action, Adam. I know that for the longest time you maintained this belief that the euro still is in a bear market, and we had this recent action to clean out crowded euro bear shorts over 109.60. 110.80. We're trading around the 113 range right now. Are you viewing this as a potential shorting opportunity in the euro, buying opportunity in the dollar?
Yeah, it's always the timing, as always. I mean, just now we're just putting up that Goldman Sachs stopped out of all their dollar long position that's against the euro, against the yen. I think it's everything that's crowded is heading to the sidelines now. You see all the momentum trades in stocks, Netflix, Amazon, Facebook, Google. You're getting cleared out and going to the sidelines, and then you get the market balanced once again. And today we see J.P. Morgan talking about the ECB cutting deposit rate to negative 70 basis points. That's a straight shot on a euro short. Deutsche Bank down $13 from 30 a few months ago. Worries about all kinds of problems at Deutsche Bank and other European banks. Whatever happens in the global economy, it's not going to be a U.S. only problem. I mean, it's just
Yeah,
a bit of a reckoning and a squaring here before we get to the next leg of everything, and that we'll see in the commodity currencies again as well today.
yeah. What is a bit terrifying about Deutsche Bank is it's back to crisis levels from 2008, underneath those levels.
Yeah,
And so to me, our banking index is not as weak. Last time we were the epicenter and the catalyst, to me it looks like America's going to get pneumonia by catching a cold from China and Europe this time. Is that the way you're seeing it?
I love the expression, and I know you love the axioms. The one is generals always fight the last war, and the meaning of that is, general uses tactics that he would have used last time if he could redo it. And I think that's starting to be what's happening in markets. So you have commodity, right? To me, the story is the commodity collapse. China, demand's maybe a touch softer. I don't see the problems in China that others are seeing. The Fed is so focused on it, I think they're wrong. The story to me is the collapse in commodities. And, that's not going to hit China so much as it does, if you add up Brazil, Saudi Arabia, Canada, Australia, Malaysia, all these economies, it's as big or bigger of an economy than China. It's bigger than the U.S. if you toss in a few more. And those
Europe is as well.
Sorry?
Europe is, the EU is as well.
Yeah, well, just take the commodity exporters, for instance, and that you have a recession in, say, all those countries. A place like Brazil is having a severe recession, for instance. That's a very large economy. And, so where does it go from there? We know that. I think that's priced in. It goes, so the thinking is that it goes to the financials, right? That's always the conduit. But that's also the thinking from the last. We're using the same playbook as the last war. And maybe it's not Deutsche Bank holding on. Maybe it's Canadian banks, or maybe it's pension funds. Some pension funds we don't know, or maybe it's mom and pop investors that are holding all these junk bonds. I think there's a bit of a risk that we're focused in financials. It's so opaque, right? We know that it's just impossible for me or anyone to say, well, what's on. The CEO comes out today and says we're rock solid. Shares go up 5%. Well, we're 10% down since earlier today in Deutsche Bank. The market's voting, but this is the kind of time when the market can really start to get skewed. As everybody looks for safety, but maybe we should just be looking for safety for now.
Well, what do you make out of gold up until recently really not getting any support from a weaker dollar until last week, or that one little that hiccup in March from Draghi? Gold advancing and a lot of money flow going into gold. You view this as a possible turn in the gold? Because I think a lot of people are going to be calling this a bear market rally all the way to $1,400-$1,500.
Yeah, well, you read my mind. That has been the trade of the year so far, and not just because it's up, whatever gold's up $100 since the start of the year, but the volatility hasn't been there, right? And that's attractive as well. I mean, it's one thing to make money. I mean, the dollar CAD longs. I mean, it was up 10 cents, but then down 9 cents. I mean, that's a tough way to make 1 cent. Whereas gold, it's been 7 or 8 days in a row now. Really since the start of the year, a nice steady uptrend, and that's the kind of thing that brings in, we got to buy and hold, and then you get the momentum, and it goes and goes. People don't believe it. They mock the gold bugs. I mock the gold bugs, but I came in at the start of January, and gold seasonals in January are fantastic, and that proved once again this year that it was the best month for gold. So we started off great. And it's held up very well here. Chinese New Year, you should get a little bit less buying. But you had a weaker dollar. I mean, gold, too, I think it gets tossed in with commodities, right? The problem with commodities is oversupply. People talk about demand, slowing demand in China. But it's oversupply for me is the story. Back in 2007, 2011, 2012, all through then, you had nickel, for instance. Yesterday, nickel hit a 12-year low. You had nickel trading at $50,000 a ton. I mean, we're $8,000 a ton now. And all that money that went in investing in all these mines, well, they assume, maybe it might not be 50, it'd be probably still break even at 10 or 15,000. And now, the money came in, the debt was cheap, they supply, you build, and now you have a mine that's up and running. it's difficult just to shut it down because all the investments up front. So you just have supply coming in. It's the same in oil. It's the same in everything. And I think gold's been tossed into that as well. But remember, gold peaked a long time ago now. Production, yeah, the production has slowed down since then. I mean, Barrick Gold, the biggest gold company in the world, shut down their operations in Chile. It was supposed to be the world's biggest gold mine. They shut that down over a year ago. You know, the gold miners have taken that supply hit. They're not producing as much, and at the same time, gold is much easier to store than something like nickel or copper or certainly oil. So,
well, how about gold? How about once you shut down a gold mine or a silver mine, that it's much more difficult to ramp up production again from that mine than it is to turn on a fracking well.
Yeah, absolutely. And it's tougher to raise the money now. And I think it's going to happen in all commodities. The classic boom-bust cycle. Everyone thinks oil is going to be at 100 forever. Every project makes sense at 100. But, you know, at 30, it doesn't make any sense. But the money goes in, and then there's a lag, and then you get production. And gold is just a little bit ahead of that curve. And gold is different, you know, from other commodities. It's a commodity in a lot of ways. It's been thrown into the pile with everything else. And I think that's kept it artificially low a little long. And I am starting to believe that 14, 15, I mean 2000, it's in sight. The technicals, there's a bit of a downtrend at 1205. That's the near-term level to watch. But I've been bullish in that, growing increasingly bullish. We're talking about ECB at negative rates, the Fed cutting, you know, back down to zero, Japan negative, Canada cutting to negative. Gold, I mean, Japanese 10-year bonds are negative today. So if you know you're not going to get any yield, you might as well not get any.
So there's more opportunity cost in cash than there is not receiving anything on gold.
Yeah,
even
I mean,
paying storage is more attractive than paying the bank to hold your funds.
I think gold's very easy to store, and you know it's scary.
Where do you hide yours?
Yeah, I know a guy. Under his kitchen floor, he has like a hidden thing under the linoleum in his floor.
Oh yeah. What's his address? Adam, you know, you're very good at seasonals, and back when I was, you know, maybe 5 years or so into the business, when the last brontosaurus was putting his leg into the tar pit, they used to have a thing called, in commodities, a February break, where seasonally there was a break in commodity prices. They sold off, and that was the break to buy. So another reason why I'm glad to have you with us here. I know we're already a little over a week into February, but could that be a possibility that we get a Fed break and some kind of retracement in gold? The grains have been good. I know we're you know, supposed to be talking about the euro and the pound and the yen, but does your work show the potential for weakness in commodities this month at all?
It's you know, the big turn now is in oil. You have about roughly the oil market works out into 2 6-month periods, and now we're at the start of an upturn in it, in oil and other commodities. And it's a very good month for the Australian dollar, and that speaks to commodities as well. So, yes. And that's just, you know, maybe if you stretch it out to the long term, back to the brontosaurus, it was. But you know, the seasonals, there's an ebb and flow to it, and now you have a period where this is actually a pretty good time for commodities.
And this is the first time you've had. First time I haven't heard you sound like a raging bear in oil in years.
Well, I was lucky to be on the right side of that trade for over a year, and I think
there's a possibility for a rally back to 38 to 40 in the crude oil that would still be in the context of a bear market rally. We had that first launch of $7. We've retraced 61.8. I'm not sure if that retracement is done, but a lot of people talking 21 and 17. So isn't the market ripe? Still a lot of people funds net short the crude oil. Does that prime it for a bear market rally up to those levels?
To me, I think we've had part of it, right? We got 26 up to 34. I think that 35 level is more one I'd look to sell rather than 40. Okay. You know, the storage is so high. You know, we're almost topped out. We have another 3 months of builds and storage, and at some point you have to dump it onto the market, and we get another leg down. And the timing, as always, is the tricky part. And I think, you know, 35 balances a risk reward if we get up there again. But you know, right now is the time to probably wait, because how the dollar, I think the dollar weakness is the story here, and how that feeds back in. I mean, it will feed into gold, it will feed into all commodities at some level. But how, you know, how high can we squeeze the euro? I think dollar yen can probably go down a lot, but the euro, you know, up at 115, it starts to get pretty attractive to sell. And even to hold just dollars or treasuries. The treasury 10 years yielding, you know, 173, it seems like pretty good when you get more than Italian 10s.
Okay, so then you're looking for more of an extension of this dollar weakness than
Yeah,
we
February,
had.
you know, we mentioned about seasonal. It's not a great month for seasonal. It's not one where you see some massive trends. It's set up for later in the year, and I mean, it's so volatile right now. These things tend to work better in a quieter market where you can get a little bit of an edge on that. It's I mean, this volatility is insane right now.
Yes. Any view on S&P's worst start in market history? January barometer saying we're not going to have a great year. Super Bowl indicator. An old AFC team won. Peyton Manning was pulling for the old timer to do it, and you know, we're attacking this 1800 level time and time again. Do you think that the top is in, and how deep could this correction work this year, or is it the beginning of a bear market in equities? I know you've been very sanguine in equities for the first few years. I interviewed you, and correct, and wondering if your view has shifted with this type of dramatic intensity to the downside.
It has, and that's why I'm curious to hear what you have to say, because you've been bearish and I've been bullish, and it's time to have a second look. I mean, when you get 10-year Japanese yields going negative, if you look at the technicals, dollar yen breaking down, it's not good. I mean, the commodity collapse is the story of 2016. The question you have to ask, and you know, and the level for the S&P 500 if we break is 1500. That to me looks like where it wants to go.
Where's that?
1,500 from 1850 here. Now,
okay. There's an old double top there at 1550 about.
Yeah, somewhere around, you know, it takes out about half of the rally since 2011. That sort of thing.
I think that was the high in 2000, and then we stalled there in 2006, 7 at the last top, and I think it's also 38% back from the whole rally from 666. So 1550 is an area I've looked at.
And to, you know, to me the question, okay, so we have a commodity collapse. It's going to be at least a mild recession in the commodity exporters. You know, how much worse does it get from there? Are financials holding the bag again? Do they need to be bailed out again? Is maybe China in trouble? You know, a few of these other shoes need to drop, and that's really what I'm watching. Because if it's not, maybe it isn't so bad. You know, even Canada, for instance, big commodity exporter. Well, you know, people have saved a lot over the last 15 years. It's been a great boom. Can Canada ride it out? You know, and just, you know, you're going to have some, in the oil exporting part of the country, you're going to have some pain, commodity in mines as well. But does it hit financials? Does it hit the broader economy, housing? Well, that's the case to get down to 1,500 in stocks, and you know, the same sort of thing needs to play out elsewhere. And clearly, the Fed's making a huge mistake, and that's not helping. Central banks have no clue. I keep hearing them talk about China. It's not China. It's the commodities and commodity exporters is the story. A little bit of China, a little bit of Europe, you know, a little bit of everything. Growth isn't good anywhere, and that's why you don't have a backstop. You don't have central banks that can really cut rates much.
And I remember at the survey we did at the end of 2016, I'm quoting you, that the Fed, if they moved in March, would be a major mistake. And that was said before we got this big sell-off in equities and a lot of air pockets in the market. So you have to even feel stronger about that now. A lot of the models are saying they're not going to do anything till June of next year.
Yeah, and I think this is a big week. I mean, we're right. Today is a huge day. We're right at the bottom in the S&P 5. I mean, the Nasdaq's already broken, dollar yen's already broken. This is a massive week, and I think what's happening today is the market is giving Yellen a chance at Humphrey Hawkins to come out and say, "Hey, listen, inflation isn't going to happen. We're wrong about this, that." They don't want to say we're wrong because they just don't say it. They say, "Well, we're going to be data dependent." That to me is the code word. Because when they want to hike, they're not so data dependent, they're forecast dependent. But when they're wrong, they suddenly can look to the data and say, oh, yeah, there's this new data, which means we're wrong and now we're not going to hike. But she needs to be pretty clear, I think, this week, or the market, it'll be like the Bank of Japan. And that's such a strong signal, too, to cut negative like that. It just see it blown up the other way in a week it's shocking, and it's a strong.
That rally that you're talking about, we had that rally from 116 to 121 in a heartbeat, and even faster under 116.
Went right back and worse, 114 now. The Nikkei, same thing. I mean, if the Fed were to say, okay, we cut back down to zero, surprise in March, stocks rally 5%, and then 2 weeks later they're back down below the lows. I mean, what would that tell you? Would say, my goodness, this market is terrible.
The emperor has no clothes. We've gone from the markets viewing central banks as omnipotent to central banks losing a lot of credibility over the last several months.
It's justified. I have to say, they just don't get that we're at best in this 2% growth era with very low inflation. I mean, you cannot create inflation in the way it used to happen. You can produce things so cheaply and so easily and ramp up production even without adding employees. It's the era of no inflation. So they're just not ready to deal with it because they love their old models. They worked on these models for 100 years.
Well, I'm going to put you on the spot, Adam, because last year you called, maybe we are going to be trendless, but last year you called some of the most dynamic trends alongside the dollar, bullish USD CAD, bearish oil. So, it was good for more than 1 month of your seasonal work. So I know you're a man with a plan, and I'd like to ask you what you're looking ahead towards as I put my Nostradamus glasses on here. I want to hear a Nostra button as to what you're laying back for and what you see as perhaps being some of the better actionable ideas in the first quarter or going forward in the market.
First, a warning. There's going to be a lot of ideas, a lot of talk. For anyone who's listening, they're going to hear a million ideas. Avoid the complicated ideas. There's been so many great ideas that have been ruined by overcomplication. And that's why I'm going to say my best idea right now is the simplest. Pull up the dollar-yen chart. Draw a flat line across the bottoms around 115.50. It's broken. Yen's going to be stronger. That means weaker dollar yen, stronger yen, right across the board. It is probably, maybe you don't want to sell it at 114.87 where we're at right now, but any bounce even up to 115.50 is enough. And probably maybe not dollar yen is the best spot, but yen longs are the trade this year, and gold longs. Again, we broke 1,200 yesterday. We break 1,205. I think it looks really good. And, just keep the technicals simple and go with them, because the headlines, I think right now, you need to be on top of the headlines, but it's dangerous to play those jerky headlines, good non-farm payrolls headline, that the market,
that's a style change for you.
Friday.
That's a style change for you, Adam, because you're real big on trading these red events.
Yeah.
So this is this is a different. See how marriage can change you. This is a style change for you. Keeping it simple, kind of thinking people will buy headlines today, sell newspapers tomorrow. And if you look at the yen, I guess a simple measured move, if you call 116 the breakdown, would be what, 9 from there, 107, 109 as a possible target. Do you have anything lower than that?
Yeah, I mean, the first one I was looking at was 110, just on the break,
Okay.
115.50. So that, but once we get going to the downside, I mean, I guess it depends on the Bank of Japan. I mean, fundamentals do matter, but I think you have to have, you know, you talk about me, you have different tools for different times, and this is a different time. And what matters is the big levels, the big breaks. The breaks are going to break, and they're going to go the same way that, you know, dollar CAD did from 134. But you gotta, you know, and it, you know, I read some good stuff. You know, how do you know when you're wrong? Well, when you're wrong, you get stopped out. I mean, Goldman Sachs today talking about getting stopped out of dollar longs. Well, you get stopped out and you move to the sidelines and you take another shot. Put together a case, the technicals, the fundamentals, whatever you can, try to get a good level and try to stay in. But
How about USD CAD, Adam? You know, with, you know, perhaps it remains under pressure while we're getting this little bounce in crude up to 35, but do you think new highs are in order? We pulled back about 1,100 pips from the recent high. Could you foresee new highs in USD CAD?
I can. Not now, though. I think we really need to sort out what's happening in the Canadian economy first. I mean, I think oil is going to 20, below 20. So it's inevitable that the dollar CAD will go higher. But right now, the dollar's getting flushed out a little bit. You get some technical corrections. Maybe you get down to 134 is probably 134, 135 is the spot for me to buy. It's impressive today, even. I mean, dollar CAD is way down today, cent down, and oil's basically flat. I guess a little bit higher now, but it was flat when we started. You know, that's impressive the way the Canadian dollar has rallied the last 2 weeks without really that much support from oil. And so get out of the way of that. But Canadian employment data on Friday was the first real indicator that there's some weakness. However, export numbers were good. And I think, you know, what's really priced into the Canadian economy right now? So we know oil's bad. We know that part of the country's going to be weak. But I think we've priced in a lot worse. We priced in the Bank of Canada cutting a couple times, maybe even going negative. Right. We priced in, you know, big trouble in the Canadian economy as a whole. Barely any growth this year. We priced in the possibility of a housing downturn, major housing downturn. So we priced in like 2.5 strikes against the Canadian economy, when the numbers have shown us only like, you know, one strike in jobs data. So we need a little bit of confirmation that something bad is happening, and maybe we've gotten a little bit.
We've already priced in a recession there.
Yeah, that's right, and so that's a dangerous spot to short a currency when a recession's already priced in.
I just have a couple of more instruments. You being an oil trader, you pay attention to the natural gas, and is that a different animal, or is that going to continue to trade in tandem with oil? Any view?
Yeah, I think it's a different animal for sure. I mean, what happened in natural gas, or what's happening in oil now, happened in natural gas 10 years ago when they were producing everything everywhere. It was flooding the market. We were up at 14. You know, Chesapeake yesterday, that was telling, right? They're the second biggest natural gas producer in the United States. The market believed they were bankrupt, or believed they could be bankrupt, you know, and you know what, that tells a lot about the market, which rumors they will believe, right? There's always going to be rumors, but if I were to tell you, you know, there's a rumor that Apple's bankrupt, well, you know what, nobody's selling their Apple shares on that, right? Because it's unbelievable. But you say it about Chesapeake and shares fall 50%. It's an insight into the psychology of the market. That I think, you know,
I would check to see if my iPhone was still working.
Yeah.
So I wanted to also ask you, you're constructive on gold, and I'm an old commodity guy, and I used to trade the gold-silver ratio, and I'm wondering if you have a view on silver and the potential of silver to outperform gold, or will gold do it basically because it's more of a monetary metal, and silver has an industrial use. Mainly, you know, they use a lot of silver in solar panels as we go green. Wondering if you had a view on the ratio between gold and silver.
I have a strong view. It's funny, especially in Canada here. There's a cottage industry around these silver bulls and this ratio, and I don't think it matters at all, those ratios. I mean, if you want a precious metal, if you're a central banker, if you're anyone, you buy gold. Gold is, silver kind of gets tagged along with gold. I don't know if it's like an Olympic thing or a historical thing, or they used to store silver in Spain in the vaults for the King of Spain. But silver isn't gold. It's not the same kind of monetary instrument. It really isn't. And the production's a different sort. It's easier to get out of the ground. The mines operate differently. And I don't think that ratio means anything. I really believe that it's a sucker's bet on silver. If you think these factors add up, buy gold. Silver is, to me, not the same thing. And I just think it's been overstated and overplayed, and people have been burned hard on that trade for the last number of years. Yeah, the industrial side is a different story, but then it's just like every other commodity, silver, right? It's one or the other, and I don't like silver for that sense. I just again, it's that simple trade I said earlier. If you like it, buy gold.
Okay, and do you think that part of the move behind gold is that there could be a stage to where if there's any kind of currency realignment or revaluation that gold might be part of another reserve currency down the road? I know that's really speculative, but I've been reading a lot and have interviewed some fundamentalists that were negative on gold, that they've moved the euro fix closer to the precious metal fix every day. Our central bankers eyeing that as a possibility if the dollar falls, if the dollar does lose its reign as a reserve currency.
Where we're at with central banks, it's like I said before, central banks like what they know. They like this system, the old system, the pre-crisis system. They're very comfortable in that, and they want to stick with that. And the gold, there's really not enough supply to make it a meaningful monetary instrument. Now, that said, I mean, Donald Trump is the kind of guy that could come out and talk about that, and there's a chance he wins the election, probably a growing chance all the time, and that kind of headline send gold up $200. So, the idea, I think, has a chance to help gold. In reality, I don't believe it will happen. The fiat currency era isn't coming to an end in my lifetime, I don't believe. But that doesn't mean that gold still can't be a great trade for many other reasons. The volatility alone in currencies is...
Well, how about this, Adam? Is there a possibility, especially if the dollar regains its footing and breaks out over the par level and starts trading 105, 102, 107, some of the targets that long-term dollar bulls have, that there's a shot for Plaza Accord 2.0, because you said the story is a collapsing commodity market, and one cure may be and giving relief to emerging markets would be a Plaza Accord 2.0, where all the central banks in the world get together and take the dollar down through direct intervention, like they did in '85.
And it would have to be some sort of realignment at the same time. I think the first step, I think that's 3 or 5 years away, because I think a lot of this pain in emerging markets like Brazil is going to last that long, and they will be desperate by that point. But now I don't think there's been enough pain to get there. The story is going to be China first and what they do with yuan. It's bizarre that they're so sensitive about this criticism of their currency being strong, and they're also they're acting to keep the currency strong. They spent $100 billion last month to prop up the yuan, and they that will run out. How much of their FX reserves do they want to spend to keep it? Why not just let it get weak? They're so obsessed with stability that they can't allow the yuan to weaken unless it's sort of them guiding it. They can't have free markets and have control at the same time, same as the stock market there. So that is kind of, I think the Plaza Accord that matters is within Beijing. Their kind of own currency regime is what matters, and that can throw the whole thing into disarray. And it might be what, if they just open up and give up, well, then maybe there's this flood in the US dollar and it just screws everything up, and it just sloshes around for 3 or 5 years, and then something needs to be done at that point.
Okay, Adam. Well, I want to tell you that I'm enjoying wearing the Mario Draghi T-shirt. Yohei sported it at one of our live events, so great marketing idea. And I ask people, I say, most people that aren't in the industry have no idea who's playing that guitar, so it gives me a chance to explain to people what I do when I wear that.
I
So,
know you love the rock and roll, Dale. So
I do, buddy, and every time you're here, we rock, Adam. I think we've covered the whole universe here today, and I want to thank you for your time. I recommend that people go to Forex Live. I know you do a lot of great educational material, you and Greg and your other associates, and anything you want to tell the community or people that view this on the recording later, what Forex Live is doing to help build up and edify traders every day, because I know that's your mission, just like mine.
Yeah, that's right. There's a free Forex portal that we talk about what's going in the market in real time. We update on by the minute on news, analysis, market moves, and we keep it absolutely live. And it's just a place to talk about the market, and we're just having a lot of fun for some days, at least.
Well, thank you, Adam. You could follow Adam at Forex Live, at FX_button, and go to the website www.forexlive.com for great content from Adam and Greg and the whole team. And thank you so much. Great chat with you today again, Adam. I hope this is a great year for you and your new start and your new life, and that pips rain down on you and your family forever. How about that? That's a long time. Forever.
That's it. I like the sound of that. It was great chat today, and I'll tune in tomorrow and the next day to see what you're thinking about stocks, because I'm really curious to see which way this goes this week. Okay, well,
just a gut. One thing that surprised me about this decline, I was long a lot of VIX products, and the fact that the VIX has not really kept pace with the intensity of the decline is either the VIX is broken, or the VIX is saying that there's some type of counter trend rally developing that is going to take the shorts by surprise. My best guess is that we bottom in here sometime this week, and we have a recovery into April, and that would be a better shorting opportunity for me. 2-year targets.
I like it. Okay, thanks, Joe.
Those are my calls. The next one's yours. Call 800-899-BEAR. Ride the wave with Pinker Commodities. That was my old my old gig many years ago when I was a young man like you. So thanks again, Adam. Great to be with you, and good hunting, my trading warrior brother.
Hey, Dale.
All right, buddy. I'll be wearing your T-shirt at the next live event.
Yeah, I'd like. Well, all right. Cheers. We'll wear it too. Take care, Dale.
Thank you, buddy. Everyone, thank Adam for his time and his views. Very complete interview, I believe, that we had with Adam. And you can. What do you think? Did you guys enjoy Adam? I always like talking to Adam. He's very sharp. So it's my mission not only for us to be sharing our work, but to bring the best of the best into our community. And also, I don't feel any hesitancy in having you guys be aware of other content sources for you to gather information for your intelligence gathering. Forex Live, Adam Button, Greg Mikulowski, they're great. You're not going to hurt yourself by following what they're thinking. That's for sure. So let me just do a quick wrap up here, guys. Adam's saying you could be short. I think that we're approaching a close, some type of target here. Maybe there's another low in US dollar yen. RSI is pretty pretty good downside momentum, but as you can see, we're beginning to get a divergence in the end. And if I'm right about a turn in the S&Ps and Norm Linsky's right about a turn in the S&Ps, perhaps we get one more low, but I think there'll be better shorting opportunities in the end, all the way up at maybe 118.5. That's my view there. Euro's gotten into that resistance zone. Adam sounded to me like he thought the euro could continue higher. I'm thinking that we're getting close to this top in Euro USD. I had 113.60 on the daily as being a back test. That's where I'm going to be interested in looking at short here, right around this range. We're not there yet. Also, to me, it's important not just that price get there, but how it gets there. So we are beginning to diverge on the 1 hour time frame. 1 hour, I think it needs a little bit more work. I think the last high may have been confirmed. And you can't even really rule out that is the 1 hour. So here's the 4. So we're getting closer and closer to this target, and the 4 hour, pretty glaring divergence. Best guess is if they turn the S&Ps, they turn the oil, that we get at least a reaction high up around 113.50, 113.60. And Dansk is okay, so maybe 118 first before that happens. I want to thank everyone for their contributions today. Thank you, Sinatra, for keeping us informed. Jay, thanks for the charts. FX John, thanks for the testimonial today. Cyric, thank you for your charts, numbers. Jax, congratulations on your EJ trade. Abel, Ron, always good to see your handle here. Forex Pipper, Simone, welcome to our community. Ricardo, thank you for your technical work once again today. You're welcome. Enjoy being called coach. Thank you, SW, Forex Stop Hunter, BW, Fame, Alien. Thank you, Alien. Pip Sniffer, welcome to our community. JM, Adinda, thank you for facilitating this. Okay, yeah. MRC, Timbo, Doug, Millen, Mystic, great to see you back. Joe, Mike, Ma, Khalid, and Jake. Enjoy the rest of your day. I'll be back with you guys tomorrow. And remember, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. And I'll see everyone tomorrow. Good hunting, my friends. Adios.